welcome everybody to another Workshop Wednesday, casual conversations for serious workflows, brought to you by schoolofbookkeeping.com, where it's all about learning QuickBooks your way. However you want to learn QuickBooks, we got a way for that. Self-paced, guided, private tutoring. We got all those options. All right, and we are joined again by our job costing ninja, Shanna Quinn. How are you, Shanna?
I am doing well, Dan. How are you?
Very good, thank you. So this is the second of our series. So if you're not tired of job costing discussions, we will have more. So last week we talked about kind of like the job costing fundamentals and some define some glossary terms and those types of things. So now we're going to get into the setup and setting up inside of QuickBooks to get the most out of job costing. So that's our question of the day, right? What's the key setup step to use job costing in QBO? So let's start with our discussion here. And I gotta scroll up here. So the main thing is standardizing practices across the board. Now, Shauna, do you find that all of your clients subscribe to the same best practices, or is it depending on their kind of trade that they do? Like a home builder might have one preference over an interior design or something like that. What have you found in your experience?
Well, I have a mix of clients. There's home builders, custom home builder, remodeler, interior designer, and then obviously subcontractor. But of the same trade types, no, they do things very differently. For the most part, our cost codes are about the same. And so, that part of it is a very, familiar and similar type setup. But everything else about how they estimate and how they're invoicing, the timing of it, that is done differently.
Got it. So how do you find that you name and organize the projects themselves so that just everybody's on the same page, whether it's your client or people on your team?
For the most part, individually, the clients were doing the same thing within each of their projects, but it is across the board with our clients that are not doing things similar. So the naming really is based off of what makes it easier for them and for their employees, their carpenters in the field. So the majority of the structure is typically client's last name and then / address. So the client is, there's the project client level and then the project level, and then the project is reiterated last name / address to make that easier of identification of what job you're at. Other clients that we have that do custom home builds or large custom builds a lot of them actually use job numbers. So it's based off of the year, the first 2 digits typically of when that contract was signed. And then just in numerical order of which the contract was signed and jobs were getting started and then job numbers were being assigned.
Got it. So, and I don't think we had talked about this in any of the prior workshops that we had done, but there's this special transaction type or circumstance, I guess, that we want to chat about first, and it's called a change order. Can you define what is a change order and how and why it plays a role in the special trades?
Well, change order is anything outside the original scope of that was estimated on. So even for our clients that do time and material and markup, they are still doing an estimate for that client to because they're obviously still going to their trades and saying, here's the job, here's the scope of it, what would this cost me? So they can then pass that information along. Just because they do T&M plus markup does not always necessarily mean that the client's just writing checks. And it could be, it could be a few thousand up to 100, or, maybe even a $2 million job if it's a complete home build. So even in that case, we do still track change orders to keep things a little bit more organized and be able to provide those actual versus estimate numbers back to the clients.
Now, is that something that is required for them to do, or is it more of best practices in that industry with regards to if they need to track some kind of change order process?
I think it definitely should be a part of best practices if there's someone that's not doing it. Just for like I said, setting the expectations for their clients to have it's not an open checkbook type of job, but also for you internally to be able to track that and make sure that that the changes and the costs that are assigned to those changes are being coded properly. Because if you pull an estimate versus actual report and your estimate only remains what your original estimated numbers were, but you continue to have higher expenses because of changes that have been requested, then constantly your numbers are not going to look good.
Right. Looks like you underestimated,
yes.
which is part of the process of, making decisions based off of the stuff that you're doing in, the workflows that you're doing inside of your system, so that you can, okay, well, I need to make sure that I track these change order process appropriately. Now, as far as how that occurs in QuickBooks Desktop, they supported, and I'm using air quotes for those of you that are listening, they supported change orders through the estimates module. When you made a change to a pre-recorded estimate, what it would do is in the body of the estimate, it would put a summary of what those changes were. So it's on the original estimate. So you send that estimate again, presumably for approval,
right.
to approve those changes. But then it isolates or itemizes out what the change is. So it's essentially an audit log of the estimate as changes are actually made, right?
Which is exactly actually what the advanced level for QuickBooks does too. When you're using their estimating function, it isolates it and highlights the changes that were made and the timestamp. So that's really cool.
Now, going all the way over QuickBooks Online and into Intuit Enterprise Suite, as we had kind of discovered when we went to Intuit Connect a couple weeks ago, is that Intuit Enterprise Suite, they're trying to use contractors as that first industry type for Intuit Enterprise Suite, and they actually have taken it a step different in that change orders is its own specific transaction type in between a sales order, an estimate and an invoice. So as change orders are made, they are actually separate transaction types that individually need approval. So I guess in your opinion, which is better? Is it is it better to have a separate estimate transaction, in this case a change order, to be approved, or is it start with one and work only with one estimate?
Well, I think that from an estimating standpoint, providing that estimate to a client, I think they like the overall picture personally. To say, here's the updated estimate with the change orders that we've discussed highlighted here for you. I find that my clients like that a little bit more. It's a little bit more organized. It's not as choppy, but also at the same time, we can also do variances on there as well. So we can say, okay, because of this change order, this is now the impact that it has on the original estimate. So we're able to even go a little bit more above and say, we're going to take this line out, not necessarily removing it, but noting that this is going to change because now it's a part of a change order itself. So just as a random example, if they originally said, I would like regular, this kind of flooring, we quoted that floor. Part of the change order now could be that they say, well, hold on, I found this much nicer, but it's a little bit more expensive. We can create that change order, but we're able to say, okay, we're reducing this or we're increasing the cost, however they want to display it on the estimate, but keeping it organized for the client, their clients to still scroll down and say, overall, here's now what I'm expected to spend.
Got it. So as most things in the QuickBooks ecosystem, it depends. It boils down to the adult diaper answer of it really just depends on what you want to get out of QuickBooks and be able to make educated decisions based off of what you put in. Right?
Well, and then in that more advanced system, in that environment, there's more options of tracking the related expenses to those, where in regular QBO Plus or advanced, there's no additional options to track that outside of the advanced, where you can create those custom fields that we talked about last week. So adding to instead of creating a separate really doesn't help that estimate versus actual from a higher level review standpoint, because all those transactions are still going to just fall by, cost code. Here's now the total, unless your clients also have change order related cost codes, which a lot of ours do, or we use the class function to assign CO.
Gotcha. So that's multiple ways that you can approach it, regarding what their personal preference is, right?
Yeah.
Now, one thing that getting in. Hopefully, we don't get too far into the weeds here, but because we do want to have this, be the fundamentals of job costing. But discussions that I've had with with prospective clients, just showing them QuickBooks. The difference, one of the differences between estimations or estimates in desktop and estimates and creating estimates in QuickBooks Online, because it was pointed out to me, when somebody is creating an estimate in QuickBooks Desktop, it shows the cost of the items and the cost codes that are put in there in terms, and then you're able to associate a markup with it right on the estimate, right? You don't have that option in QuickBooks Online. I was just taking a look at it while you were answering the last question, but there's not a column to show the cost. So talk a bit about when they're creating estimates, which is better, right? And if they're using QuickBooks Online, understanding that might not be an option or an ideal workflow in QuickBooks Online, because that cost is not there.
Well, so in QuickBooks Online Advanced, where you're actually able to create job-specific estimates, the estimate itself does have a column, and it is by cost code, and then you can either show that cost code depending on what your template format looks like. But it does have a your cost field and then the margin field, or markup field. So you are able to, but you're right, that column, you don't, last time I looked, we don't have an option to show it or not show it. So in the background, though, when it does the estimate versus actual, it is going to pull from that line item plus whatever your markup was. Alternatively, what a lot of our contractors do when they're providing the estimate anyways, is they'll make a builder fee and say our builder fee is 20 or 22 or 23% of our hard cost as referenced above. So we will package everything up to make it hard cost above, and then soft costs, are below. Soft costs meaning, like administrative time, job site maintenance and cleanings, that kind of thing. Accounting fees, if you pass that along, your insurance fees, if that gets passed along, that's not stuff that's marked up. It's stuff that is our soft costs for our jobs. But everything else, your plumbing, your framing, your electrical, all that's hard costs and all of that, then you just have your percentage in the quantity line. And then you have the subtotal of what your hard costs are formatted into and brought over into the, your per item, and enter it there. So it brings it up and it shows it on there. Most contractors do say, hey, here's what my cost is. You're going to be paying me 20% or 25% for labor on markups, and you're paying, maybe it's 18. Some people play with your materials versus subcontractor because everybody looks at subcontractor fees being a little high. So to put a 20% or 25% markup, they might say, well, we're doing 20% on subs, but 25 or 28% on material. So they can average out.
And is that something that they want to show and display that to the customer, or is that essentially giving the customer leverage, like, hey, I see what your markup is here. Can we negotiate on that?
Well, it is an item that can be negotiated. Obviously, if it's listed there, most of my contractor clients are very upfront. Those that I've worked with in the past, everyone has been upfront about it with their clients, and it's written in stone in the contract. So if you've got a client that they've got a client they're signing on, they're going to review it to see what it's going to cost them too. So, I think it's more acceptable that it's put out there, where before it was sort of worked into everything.
Gotcha. So,
I think there's more honesty.
Yeah. Imagine that in the contracting space. So the foundation of, setting up a business, as far as the financial picture, of course, is the chart of accounts. What is your approach towards creating a standardized chart of accounts in hopes of getting the most out of the financials in the job costing space?
Our COGS are really kind of, we keep them slightly limited because I can drill in by pulling a product, by pulling a report by cost code. If I see something wonky, when you know what your average markup is for your clients, if you pull a report, P&L, and you do a percent by income listed, and you're like, oh, that's kind of interesting. I've got a way higher number in my COGS than it really should be based off of this fixed margin or markup that we use. So I think our basic chart of accounts is literally general liability, workers' comp. If we have field labor, we do put that field labor up in our COGS to keep that so that your COGS is a true representative of what you're billing and is covered essentially by income. It's not overhead. Some CPAs don't like it, some do. Those that don't, we just do journal entries to reverse it for year end and move on. We do materials and then subcontractors and 1099 laborers. So if they are not an actual, if they're not an actual subcontractor, it's just a person that I hired to come in and lay some concrete or put some papers down, and they're not actually incorporated. I know that 1099 labor line is likely one that I don't have insurance on. So we're able to, focus on that and know that I might have to pay a little extra towards their workers' comp and general liability and stuff like that to keep up with costs. But when we need detail, we go in through cost codes, not through our chart of accounts.
So that's so like when you're trying to separate out your direct costs and the indirect costs, you would do that more in a cost code on the product or service level, as opposed to in the chart of accounts themselves, right?
Yes. Yeah.
Okay. Have you ever had trouble uh, with tracing costs to a specific job because of the chart of accounts setup? Or is it more of you're just overdoing it because you're getting, with all the different dimensions essentially that you can use of costs, cost codes and classes and the projects, you'll have more than you need to get the report that you're looking for out of that? Or have you ever seen, people make too much emphasis on the chart of accounts setup?
Yes, I actually reviewed a file yesterday. Every single cost code had the same chart of accounts under cost
Oh,
of goods, which then why would you use both? So they had over 200, 200 accounts in their COGS sub accounts. And every single, like I said, every single one of them was, individually mapped to the same exact coding as a cost code. I don't see why that would be necessary because, like you mentioned, all the other features we have that can help us drill in. And we pull on a weekly basis. We are automatically pulling and reviewing any COGS booked transaction that is not assigned to a job. So if it accidentally got brought over as a cost of goods, but there's no true job, related or assigned to it, we know every single Friday and we're able to go back and review those. Just like we have our Ask Client Expense and Income and COGS account, if we know these are vendors that they're paying that were constantly are job cost related, those are also reports that we're pulling and reviewing on a weekly basis to make sure that, especially for our T&M clients, we want to make sure that we're capture everything so we can invoice it for them and they don't miss out on that revenue.
got it. So that kind of segues nicely into the products and services, or that's where you would segue or move. If you see, okay, they've got a monstrous profit and loss here, maybe we can consolidate that and expand out on the cost code. So that's where you're gonna get that split on your cost code setup, right?
Yeah, absolutely. I mean, and you could be as detailed as you want. It's obviously going to be very specific to whatever their trade is, or even my client in the Keys has different cost codes and different markups because of his location. So he mostly works on historical homes. So he's not ordering, the same stuff down the street from, Ace Hardware or Home Depot or Lowe's. For the most part, he's having to do a lot of special orders, or we're having to have a house relocated going down the street so that now the person coming in can build a new house, but that's a historic property. So there's obviously different codes based off of what you're doing, but the main thing you always want to keep in mind for your cost codes is you don't have to be as specific as down to like, okay, these are untreated pine 2x4s or 4x8s, right? Like you don't have to be that detailed, but you can if you want. And then you just point that to your material COGS account. And when you set it up properly, but you always want to keep material and internal labor and subcontractor and 1099 labor separate, just in my opinion, because obviously our contractor clients are undergoing constant audits on sometimes it's quarterly, sometimes it's annually. So to make that easier on the audit side, keeping those items separate and coding them properly and catching to make sure you're coding those properly is a constant and a big thing, just to make sure that that's set up properly. But be as detailed as you want or be as minimal as you want, but keep those separate.
It depends.
and it depends.
So you mentioned subcontractors and 1099s as if they're two separate things. Are they two separate things, or are they? Because I know a lot of people will conflate the two. And
yes. So I look
Subcontractor
at them as two
1099 labor.
separate things because there is a 1099. My subcontractor is likely an LLC reporting as an S corp or a partnership. So 1099s are required, obviously, for individuals or single member LLCs, right? And then the corporations, they don't require a 1099, or you're not required to file a 1099 on them. They also likely have insurance if they are incorporated, where a single member LLC may not be. So again, going back to the auditing and stuff, I keep them separate for that purpose, and also for easy insurance certificate and stuff tracking.
Got it. So, speaking of, subcontractors and 1099, there's usually, and I guess in general, the standard practice for most contractors is billing by the hour, or time is very an important factor. So what have you found has been one of the best practices for tracking that time? Is it the time tracking actions that are in QuickBooks, or is it something else that you found to be a best in class time tracker?
Well, so we kind of touched on it a little last week, but when you're running payroll in QuickBooks, utilizing their own time tracker within that is easier. It's obviously less work. You can mark it billable, and then when you approve it, it comes over to your QuickBooks, and you just easily can say and assign in the profile of that employee that this is their billable hour. Comes over, billable hour is 99% of the time there. There's always the 1% in QuickBooks though, so make sure you don't miss that billable hour amount listing there. But it is the easier way to go. And I do think that for the most part, even though my mind still keeps calling it T-sheets, sorry, now QBO time, I think it's pretty user friendly from the guy's perspective in the field. It's pretty to the point, limited. I mean, they just want to punch in and be done, and then punch out when they're done. So even some of our clients who have on the, I will be kind, older side, and have like old flip phones, not new flip phones, because those are Wi-Fi enabled. But we've gotten used phones from others, and we have a Wi-Fi connector on each job site for those employees to be able to connect through that extra device and log their time.
Yeah, I mean, some of the the conveniences of a QuickBooks time is that geofencing option, where you can set up a perimeter essentially on the job site. So somebody who is using QuickBooks time, they physically are there, and the phone crosses that fence, so to speak, and says, "Hey, it looks like you're on the job. Would you like to clock in?" And then all they have to do is just tap yes, and now they're logged in at that time. That time is now started, and then lo and behold, when they leave physically, it says, "Looks like you're leaving. Would you like to clock out?" Right? And then they just tap. They affirm that.
I actually really like about the QuickBooks time too is a carryover from T-sheets that I set up with a lot of our clients to say if their time on the job site was incident free, which has been a really great tool for us to track even by employee, especially when you've got like reoccurring things where the employee is like constantly for some reason harming themselves. We're able to track it back day and time. Okay, Robert, for some reason, really likes to find the nails with you. So, we need to have a conversation with him about thicker shoes or something, just from that perspective too, having those custom fields that you can make required before they even can clock out. They have to enter the incident free, yes or no. And then obviously the cost code associated to the labor that they're performing, which you're able to filter by job as well, not just by. So I could say, yeah, we have all these cost codes, but at this place, we're only doing this, this, and this. So they don't need to run through and memorize 100 and something codes of labor. They're just going to be performing, 20. And so we can go in and say, assign these 20 codes of labor to this job.
Makes sense. Now, one thing that has slightly confused me over the years is on time, you're able to associate a service item, but you're also able to put in a billable rate, right? So for that person. So how does that equate to, the workflow, right? If they're using a service item and it's got a price associated with that service item or labor item, but then the person doing the work actually has a billable rate, who wins in that case when you're then putting that time back on the invoice to bill back to the customer?
So the rate is assigned to employee level. When you're setting up internal labor codes in QuickBooks as a product service, I would not assign it a rate because you don't want it to be associated to a fixed rate. You want the billable rate of the person that is performing those tasks to be what it picks up when you go to approve and add that time entry onto an invoice.
Got it. So the billable rate is what's gonna win, unless you have a rate associated with
If
with
you
the
have
item.
conflicting, honestly, I've never set it up, so I guess I just wouldn't even know. But I would believe because it comes back associated to a time sheet associated to an employee, it's the billable rate that gets grabbed, because we're not checking the box that says that because it's an employee, we're not invoicing, or we're not billing or paying that. It's not a payable item. So it's going to get automatically as a payroll item, it's going to get grabbed and put into field wages based off of our payroll mapping.
Got it. Okay. So the plot thickens when it's an employee versus a subcontract.
Yes. Yeah. And you can have subcontractor rates under the vendor profiles of what their billable rate is.
Right. And there is a list in desktop that doesn't exist in QuickBooks Online, which I think nobody used. I would get maybe one call every 5 years about this billable rate list or billing rate list that's in QuickBooks Desktop that just doesn't exist. But the whole concept is that, you would bill back to the customer based on who did the work, right? Because if you have, an artisan as opposed to an apprentice,
right?
They're going to pay. The customer will ultimately pay more for that level of craftsmanship, right?
Absolutely, yeah. If you've got a project manager and then you've got a carpenter, their rates are going to be different, but they're also likely performing different tasks on that job site. So yeah, they're going to differ based off of that, and they're calculated, and we calculate them out for a lot of our clients. We revisit it quarterly. I think we also touched on this last week, but we do it based off of what we're paying, that per $100 per hour or dollar that you spend from an insurance standpoint for your workers' comp rate. So what their pay is, what the taxes are from an employer cost. We take into account the insurance that it costs, how much we're paying in insurance to that person. And then we talked about benefits. So if they've got cell phone allowances and stuff like that, keep all of that in mind when you're building out what your billable rate is.
And then, we haven't really talked about like purchases that are made that you want to track those expenses back. But do you find that, the purchase order module is necessary to use, or is it just really just tracking expenses as kind of like cash purchases as opposed to bills and those types of things? Or again, does it depend?
Well, I will tell you this, until recently, when I started playing around with the new changes in advance with their estimate and being able to convert to POs and stuff, that's got some fun stuff to it, for me. I haven't played with it
No,
a whole lot.
that's not fun sarcasm, right?
No,
That's
no.
actually
I mean, fun as in
nifty.
like, oh, look, it works.
Got it.
And it's usable down the road from a reporting standpoint, right? But most of our clients don't use the purchase orders within QuickBooks. Actually, none of our clients use purchase orders within QuickBooks. If they're doing purchase orders, they're using a job costing platform to manage those expenses, then have it tracked by the job supervisor, approved by the job supervisor, and then converts that to a bill. Then it comes into QuickBooks.
Got it. So, like, I guess the advantage of, especially somebody using QuickBooks Online Advanced, if they are using purchase orders specifically inside of QuickBooks, is if you have those approval processes that you can put in, so that you have that oversight inside of Advanced. Is there, other than the approval process, are there advanced features that you found that, and I'm not saying advanced meaning that they're advanced in general, but inside of QuickBooks Online Advanced, are there features that are you're really it's like you wish you would have seen it sooner, and now you're incorporating that with your other clients?
Yeah, well, and I think that too, they've, that the rollouts have not been consistent of like the updates that they make. So if maybe, and obviously I'm not doing estimating versus actual from a per client perspective in my own books. But the other day I'm rewriting my 2026 contracts to get out to all my clients tonight. Hopefully. And one of the things that I was saying was our clients that do build or remodel on client-owned lots, not their own. So all of those numbers fall on the P&L. The advanced could be a functionality, could be something with that estimate versus actual and that audit tracking capability. It could be something that we're able to use with our clients instead of building out the custom job workbooks. However, I will say that right after I had my first phone call with one of our clients yesterday to show my excitement about, hey, we could save you money on these per job workbooks by doing it here, she didn't like it because she likes the ability and the workbooks to go, we call it her yellow boxes. So she would yellow box it and then send us a comment and ask us to look into something or change this to this. And you can obviously have that communication with them through Advance. That level of communication doesn't exist down to that transaction level. So the first call didn't go so well. But I'm hoping that as I continue to have these conversations with our clients, that they will be a little bit more on board and we can find a workaround for fixing those. Hey, if we have to have a specific conversation and adjustment made on a per transaction basis, what else can we do? What can we create to still have that level of communication and tracking that we can go back to?
And that seems to be, the case, right? When you find a feature or function or workflow that's in QuickBooks that they've created for you, and then you present that to the customer, there is, this, well, what is it going to take for me to transition my workflows, and what am I giving up that I can't do inside of it? I need my yellow boxes, right?
When you're talking about transaction specifics, or even just that level of detail that we build out in our job workbooks for our clients, we're doing, there's a lot of information and you can see it in different ways that we've built out, because I have a template and we're just using that and customizing it. So it is different. It's not that it's not better or worse. It's just that it is different. So I'm now trying to see, okay, I do think that this is still a better direction to go in, because it obviously does eliminate potential for human error. When we're building out those workbooks, one formula goes awry, and then you're like, where is that formula wrong? Which box is not mapped right now? And it can throw off the whole workbook. So I do think trying to utilize the one product and put everything through that is going to be essential in the coming year for our clients. But now my goal is to, what else can I offer to them to still have that back and forth communication?
Got it. So any other thoughts you have about setup, in this, before we get into the nitty gritty of actually doing the work inside of QuickBooks? Any other things that you can think of that you want to point out in the setup phase or the setup part of your engagements with your clients?
I think just knowing the settings, when we get into the nitty gritty, we'll dig more into that, making sure that you're checking the boxes that need to get checked in that account settings to make sure what you want to utilize and set up a certain way is being done correctly or populates into your QuickBooks. Because not everything is already billable. Things like that. You could put your markup into your QuickBooks and say, I want it all to get marked up. So there are, I think when we get into the nitty gritty, that's when I can go and do my tangents on everything. If
Right.
you get
And that's
into
what we're
that
gonna,
now, Dan, you're going to be like, Shona.
and that's what we're going to talk about next week, is actually capturing costs the right way. So we will expand on the setup, the settings that are actually inside of QuickBooks Online. So we're talking concepts here these past couple weeks. Now moving forward, then we'll kind of dive into the product and show around or walk around some of these actual workflows. So look forward to that next week as we kind of talk about that. But I did want to ask you about B4CG, right, which is the Bookkeepers for Contractors group that you've created. What has, it's been a whole week. What what has changed since we've talked about it last?
Oh my gosh. I have, I think just the Intuit conference, getting there and, networking a little bit more. I've been exposed to so many more applications that I could find super beneficial to a firm perspective, but also for the trades in different ways. So I've just been having so many phone calls. And it's all great. It's all exciting. So really the partner program and opportunities for our members just continues to grow as far as the tech stacks and, other revenue opportunities as the accountant or firm owner for referring things to your clients. So, the B4CG is really just, it's just kind of blossoming in this. I think I even initially thought it would turn in because my initial was, I want other accounting professionals to learn how to support these special trades and how to support them properly. But I'm also doing it's a blog, but it's an interviews type of blog posting where one of my largest clients, the one that you helped me to convert desktop to online, we are actually doing an interview next week where we're taping it so that I can teach others and he could provide feedback on how to support a company of that level and of that size as an independent accounting professional. Because I don't think that I don't think that when you start out as a firm owner, you're not thinking that the possibilities of supporting somebody of that size it comes to mind. But if you've got the knowledge, you've got the experience and drive, you can certainly be that micro CFO to a large company. And they were 67 million revenue on an annual basis last year. This year they almost doubled. So, the opportunity are there, but it is, knowing that it's there and how to do it correctly.
And then ultimately, when when B for CG is got its own legs and it's on its way, you will have a community of accounting professionals, so that when a prospective client comes in, you'll be able to vet them and kind of do a matchmaking. If it's not something that you want to take on right away, or you Shanna doesn't want to take it on, but you have now basically a team of vetted accounting professionals that you already know their level of expertise, and you'll be able to align kind of like a matchmaking service.
I'm calling it matchmaker of margins.
Oh, there we go.
What I did there.
Yeah.
Yeah, I'm really excited. That part rolls out January. And so we'll start taking basically all prospects that are even just coming to my firm, Bookkeeping for Contractors, will start to all flow through the new company. And we'll vet the caller, we'll vet the trade business owner that's reaching out, looking to it, and we'll be able to use that against our membership community to see who would be a good fit, and then be able to pair them up. So, the referrals are going to be all sizes. So it's not all just going to be like, small pop.
67 million.
Right. I can't promise that there's always going to be a lot of them, but the opportunities are there. And so, it is very exciting. That part too has been a lot, and I'm trying to put as much effort in the trade business owners, just as much as I'm trying to the community, and references and all of that, relationships and tech stacks, from a accounting professional standpoint as well.
Awesome. Well, so we will continue this conversation next week, where we're actually lift the hood and take a look at QuickBooks Online and some of those things and workflows and best practices to capture all those costs correctly.
I'm actually building a custom background for this conversation too.
So it's not your pool. That's not your pool.
That is a good looking pool.
It is. Yeah.
A little small, but
it does look refreshing. All right. Well, everybody who watched today, appreciate you joining us today, and we'll see you next time on the Workshop Wednesday, and hope everybody has a great week.